Okay, so today this is question number 6 for the quiz access, and we are just gonna jump right in. So this first one says depreciation. So what we're doing is just filling out the journal entry. So depreciation on the company's wind turbine equipment for the year is 5,300. So what we're going to do here is we're going to debit the depreciation expense. We're going to use our depreciation account. So depreciation expense is going to be debited for 5,300, and then our accumulated depreciation is going to be credited for 5,300. And the reason for this is because throughout the year we're dumping this depreciation into the accumulated depreciation account, and so now we're going to pull it out of that account and put it in as the expense. So number 2 is our insurance is prepaid insurance. So we get to figure out how much we've done. So we had a $2,300 debit balance at December 31st before adjusting for the cost of any of the expired coverage. Analysis of prepaid insurance shows that $750 of unexpired insurance coverage remains at the end. So we know that we have $750 left in the account. So we have to pull out what we have used. So what we're going to do is we're going to go to insurance expense here. That is the account that we are debiting, and that is $1,550. And that will be, let's see what they call this, probably prepaid insurance. There it is. $1,550. Okay, number 3. The company received $3,900 cash in advance for sustainability consulting work. As of December 31st, 1/3 of the sustainability consulting work had been performed. So when we are putting this on the balance, when we're receiving the money, when it hits the income statement, if we were just receiving the money immediately, then it would just go to revenue. So this is going to be, is there a consulting revenue? No. So this should be service revenue, should be debited. The 1/3 would be, excuse me, this is unearned revenue, and this would be services revenue. We have to figure out how much. So the 3,900 divided by 3. So what's left of that? That would be 1,300. That is performed. So let's try that. Okay, December 31st, 1,500 in wages expense for the organic produce. Workers have been incurred but not yet paid. Okay, so this is going to be our wages payable and wages expense. So we're going to debit our wages expense, the $1,500, and the wages payable. All of these we're just making it so that it's going to show up correctly. So we have these payable accounts that we are creating, which are going to be liabilities. So we have to credit the liability because we're taking it out, and debit the expense because we're paying that. And then number 5 is going to be 430 of interest revenue. So on this one, we're going to do interest receivable. And the line that we're going to be crediting is interest revenue. So we're going to do 430 there, 430 there. Because they are going to owe us. So we're going to have this show up as a receivable. That's going to hit our asset side. This is going to hit our liability side. And excuse me, this is going to hit our income statement. So let's check the work and see if we're right. And we are. So again, whenever you're doing a journal entry, remember you're going to do the debit line first and then the credit line. And you have to hit whatever account is going to be debited, obviously, first. So depreciation expense, the expense line, unearned revenue, wages expense, interest receivable, those are all of your debits. And then you hit that credit or whatever account it's going to be pulling it out of.